Hello friends, welcome back. So we are now continuing our study related to our income and expenditure account. In today's session, we will learn about items on expenditure side of the income and expenditure account of a not-for-profit organization. In my previous videos, if you have already watched it, you would have seen that we have learned about receipt and payment account, income and expenditure account, about the contents, about the format in which it is prepared. We have learned about subscription, how the amount which is going to be credited to income and expenditure account as subscription is going to be calculated. And also we have learned about the items which appear on the income side of income and expenditure account. So kindly watch those videos to understand the topic related to the financial statements of the not-for-profit organization. Today's session, we would be learning in detail about the items that appear on the expenditure side of the income and expenditure account of a not-for-profit organization. Now, as we know, income and expenditure account is a nominal account. So we find that we write the items of income and items of expenditures into this account. So basically it relates to the items related to the current year. Now, what are the different types of items that come on the expenditure side of income and expenditure account? We will be seeing that in detail. Let us start with the first type of items, which are normally these revenue expenses. Items which are of revenue in nature, or the revenue items. Basically, when you have learned about the receipt and payment account, you have seen all the payments made, whether they're related to current year, previous year or next year, and also the items whether they are revenue in nature or capital nature. Everything was found on the payment side of your receipt and payment account. But however, when it comes into the income and expenditure account, it gets filtered out and only the current year items will get into the expenditure side of income and expenditure account, and also those items which are of revenue in nature would come into the income and expenditure account, which means we would be eliminating from the total payments the items related to the previous year and the items related to the next year, and take out only the item related to the current year and put it into our income and expenditure. Similarly, in the receipt and payment, there are both items of revenue and capital expenditure. We would be just taking the revenue expenditures and adjusting it to get the current year amounts and taking it to the expenditure side of our income and expenditure account. Now, what are the examples of these revenue expenses that I'm talking about? There are several expenditure of routine nature, like you can have salary, which is paid to the staff for working there in the not-for-profit organization. There is rent which might be paid for the building where they are carrying on their activities. There could be electricity expenses that are going to be paid on routine basis. There can be office expenses which might be incurred. There can be printing and stationery, postage expenses which are incurred. You can have items like insurance, and you can have advertisement expenses. So these are some of the examples. There are many more which can be found, like you can have the audit fees, you can have the honorarium paid. So we will be discussing them in detail in further slides. But these are some of the examples of items of revenue in nature, the revenue expenses which are incurred by an NPO, which we would put on the expenditure side of the income and expenditure account. However, in the receipt and payment account, what do we have? In the receipt and payment account, we have the payment made during the year. So what do we get from the receipt and payment account? It is the payment made during the year. So this payment made can be related to the previous year, that is the last year. It can be related payment made related to the current year expenses, or it can be payment might be made in advance for the next year. Now, however, when we are taking it to income and expenditure account, we are supposed to eliminate the previous and next year, and we are just supposed to take the current year expenditure. So we will be adjusting the payment which is being made with certain adjustments related to the outstandings, prepaids, and we would be arriving at the advance payments made to arrive at the current year figures. Now, therefore, whatever is the payment made, that would be adjusted. Now, moving further, let us find out how do we calculate. We'll take the example of salary. So, when we start, we would start with the amount which is received from the receipt and payment account. From there, we receive the amount related to salary paid during the year. So that would be always our starting point. We would write that amount, and now we will do the adjustments. The adjustments are nothing but certain figures are going to be added, certain figures are going to be subtracted. Now what do we add? There are two items that are normally added. That is the outstanding salary at the end of the year and the prepaid salary, if any, at the beginning of the year. And we would be subtracting certain items, which is the outstanding salary at the beginning of the year and prepaid salary at the end of the year. So when we adjust these amounts, the amount that we finally arrive at would be the item which would be debited as salary expense in our income and expenditure account. So this would be the amount. Now let us understand the logic why we are adding and why we are subtracting certain items and how we are able to arrive at the current year salary expense. Now, as we know, in the receipt and payment account, we have the amount paid during the year. As I told you, it can consist of amount paid related to the previous or the last year. It can consist of the amount related to the current year, and it can consist of the expense related next year which is paid in advance. So this includes all these three, but we have to ascertain ultimately arrive at the current figure. So we would be adding certain item. What does this add item? We add outstanding salary at the end of the year. What do we mean by salary outstanding at the end of the year? As at the end of the current year for which we are preparing the financial statements, that is income and expenditure account, there is certain amount of salary which is still to be paid to the staff, which has not been paid. But whether it is paid or not, on the basis of the accrual concept, it is the expenditure of the year. But that has not come in this figure as paid because it is still to be paid. Not yet paid, it would be paid in the next year. So as it is outstanding, not paid, it is not included in this amount of paid. So we are supposed to include that amount because it is the expenditure of the current year. Same way, there might be some salary which is paid in advance in the beginning of the year, beginning of the current year, that is on 1st April of the current year, there might have been some salary which has been prepaid. Means last year they paid in advance related to current year. So that has already been paid in the previous year, so it wouldn't have come in this paid amount. But it is the expenditure of the current year. So we add that amount too. so that it gets included and comes into the expenditure of the current year. Whereas the outstanding salary at the beginning of the year means as on 1st April of the current year, if there was outstanding salary, then it means it is related to the previous year. Previous year salary which is getting paid in the current year. So in the paid amount, the amount related to previous year which was not paid would have been paid in the current year and included here. But that is related to the previous year, not related to current year. So we have to subtract from that paid amount. So that is why we subtract the outstanding salary at the beginning of the year because it is related to previous year. Same way, there could be prepaid salary at the end of the year, means as of 31st March of the current year. Some salary might be paid in advance, means they are paying in advance for the next year. So it would be included in the paid amount because it has been paid already. But it is included here, but it is not related to current year, it is related to next year. So we are not supposed to take it. So we subtract that amount. So when we subtract this amount, ultimately we would be arriving at the current year expense related to the salary. And this is the amount which would be debited to the income and expenditure account as salary expense. I hope it is clear. The same thing would be done with other expense, like in case of rent, there can be outstanding rent at the beginning and end, there could be prepaid rent at the beginning and end. So the same way, the same logic of adding the outstanding at the end and prepaid in the beginning and subtraction of outstanding at the beginning and prepaid at the end is done to arrive at the current figures, and we take the base as the amount paid which you find in the receipt and payment account and adjust it in this manner to arrive at the amount that you would be putting on the debit side of your income and expenditure account. So this is common not just for salary but for any other revenue nature item, that, as I told you, you could have rent, you could have electricity expense, you could have insurance. Whatever is the type of expense, when adjustments have been given, we would be adjusting it in such manner to arrive at the current year amount which would be debited to income and expenditure account. So this is how the normal routine revenue expenditures, as I had given you example, is treated and amount arrived at. Now moving further, let us go to the next item that I will be discussing is honorarium. Now what does this honorarium mean? Honorarium is nothing but a token payment. A token payment made for voluntary services. You can note this down to answer your examination question. These terms would be full, and it is actually nothing but expression of gratitude for the service that is being rendered by that particular person. Now, let us take the example of a charitable hospital. There, some surgeons or some eye specialist or some dentist or such person, basically doctors who are specialists, they might make a monthly visit, and when they visit, the entire day they will spend and voluntarily they will render the service. Whatever is the specialization, they would render the service to the patients who come on that particular day and treat them and provide the service to those patients. Now, those doctors normally would be charging at the whatever the rate they were charging, but when it comes to charitable organization, they might not ask for the same amount of payment. That time, to show the token of respect for the voluntary service that the doctor is doing, the charitable organization might by themselves pay some nominal amount as a token payment to show their gratitude, to express their thanks that they spent one day of their time. Instead of earning money, they are coming here and volunteering here and rendering services to the patients at such nominal, so that people can get treated, patients can get treated at such nominal cost, which is not possible if they go to private hospitals. So for that purpose, when some payment is made by the charitable organization to such doctors, you can call it as honorarium. So now if it is a educational form of organization, then lecturers might come in. Guest lecturers come in and deliver lectures and they go. So for them also, payment might be made in this manner. Some small token payment. For entire day they spend there, they might be paid certain token amount. If they are rendering service outside, they might be getting much more. So that token payment is called as honorarium. So this is what honorarium is about, and where do we find it? We debit it to income and expenditure account. So this is also an item which comes into the debit side of the income and expenditure account. Now moving further, the next type of item which I'll be discussing with you is the cost of goods which is consumed. This is very important because normally students find difficulty in ascertaining of the cost of goods which is consumed. Now what do we mean by goods consumed? Now let us take the different forms of NPO, like it can be a charitable hospital. So what is the main goods that is consumed in a hospital? It is medicine. So when we are talking about charitable hospitals, they have to be dealing with medicines. So they will be buying medicine, selling medicine, giving away medicine at concessional prices. So there is going to be medicine consumed, which we will be ascertaining. There will be stationery. There might be for sports club if we take. They have sports material. Those people, members who come in would be interested in different sports, and for that sports material would be made available so that they can come, hire it, they can play, they can relax and go back. Those materials will be there kept for their use. So that also we have to find out how much portion of it, as it is used, it will be getting exhausted. It has to get, and revenue is being generated by use of those sports material. So against that revenue we will have to charge the cost, and therefore we will be ascertaining the cost of the sports material consumed, which we would debit to the income and expenditure account. Similarly, there might be stationery. In all these organizations, whatever be the form of organization, stationery is a common item which is likely to get consumed. So we might have to calculate cost of stationery consumed during the year so that it gets charged into the income and expenditure account. When we are saying charge, it means it comes on the debit side or the expenditure side. We are putting it against the income to ascertain the final result, which is surplus or deficit. Now, basically, how would we go about ascertaining this cost of goods consumed? Now, there are two different ways that can be used in ascertaining this cost of goods consumed. One is you can prepare a statement method and you can ascertain the amount of all those materials or the goods which is consumed, it is medicine consumed or sports material consumed, or you can even use the account method where you find out the amount using the account method and determine the cost of goods consumed. I will be discussing in the further slide both these methods using an example so that the concept becomes very clear. Now basically, when let us look at the example and understand this particular matter. So now I have taken here medicines. So it is related to some charitable hospital. Now here what is that? Calculate amount of medicines consumed which is to be debited to income and expenditure account. The details related which are given are as on 1st April 2020 what was the balance, and as on 31st March 2021 what was the balance. So this is the amount. First, stock of medicine. So how much medicine was lying with the NPO as on 1st April and as on 31st April, 31st March of the year. Creditors of medicine. Creditors of medicine means the creditors related to the medicine purchased. They are to be paid 2 lakh as at the beginning of the year, and as at the end of the year the NPO owes creditors 1,30,000 which they have to pay towards a medicine. So they have made credit purchases. Then they have given advance paid for medicine on 31st March 2021. So this is advance paid as at the end of the year. Means related to the medicine which is going to be supplied in next year, advance has been paid, which is 1,30,000. It has been paid in advance. Similarly, advance paid for medicine carried from the year ended 31st March 2020. 31st March 2020 is the previous year. Our current year is what? 1st April 2020 to 31st March 2021. So they are saying 31st March 2020 means it is related to the previous year. So previous year they had paid advance. So that is advance paid for the medicine that would have been supplied in the current year. That stood at 20,000. And the amount paid for the medicine during the year is 10,80,000. So what is this amount paid? Where do we find this? We would be getting this from the receipts and payments account. From this receipt and payment account, on the payment side you would have seen buy medicines. Amount which has got paid is 10,80,000. So when we are preparing the statement method, as I told you for the revenue expenditures of salary, as I said, salary paid we take. Same way, when we are preparing the statement method, we will be using this 10,80,000 as a starting point, and we would adjust all these items to arrive at the medicine consumed during the year. So please pause this video and note down this question and then continue with the video. Now moving further, let me solve this question first under the statement method. So this statement is related to calculation of medicines consumed during the year. So as I told you, the starting point would be the amount which has been paid. So amount paid for medicines for the year ended 31st March 2021. We start with the 10,80,000, which is the starting point. Now, what are the items that are going to get added? I will just write it down and explain it to you. Like, we add the stock of medicine at the beginning of the year. That is on 1st April 2020, whatever was the stock, that would be added. And there will be certain less items. Under that, the stock of medicines at the end of the year would be subtracted. So that is 31st March 2021. Then creditors for medicine. Whatever the creditors for medicine we had, whatever was in creditors as at the end of the year, it is on 31st March 2021 would be added, and creditors for medicine at the beginning of the year would be subtracted. And then whatever is the advance that has been given, advance at the beginning whatever was given, that is as on 31st March 2020, whatever they've given would come in the add, and the advance at the end, that is as on 31st March 2021 would be subtracted. So if you remember the add items, the opposite is the subtract item. So what is added here? We start with the amount which is paid as per the receipt and payment for the entire year. We adjust it, we add the stock of medicine as on 1st April 2020. That is, the medicine which were lying at the beginning of the year is added, and then whatever is the medicine at the end, stock which was lying, would be subtracted. The creditors for medicine, that is whatever was supposed to be paid for the current year but has not been paid related to current year, is lying as creditors for medicine. So that is related to current year, that is why we are adding it here. Whereas related to the beginning of the year, whatever is the creditors for medicine, that is basically related to the previous year, and that is why we are subtracting the creditors for medicine at the beginning. Same way, advance at the beginning means the previous year advance was paid, means it is related to the current year 2021, and that is why we add that, because it is related to current year. Whereas advance at the end means as the current year end, if you are paying advance, we would be paying it for the next year. So that is not related to current year, it is related to next year. That is why we subtract it. So this is how we add these items and subtract these items. So now let us look at the different amounts. Now what is the stock of medicine at the beginning? 3 lakh, and the end is 50,000. So let us write the stock of medicine in the beginning 3 lakh here, and 50,000 at the end is to be subtracted. Now let us go to the creditors for medicine. Beginning is 2 lakh, ending is 1 lakh 30. So ending we add and beginning 2 lakh we subtract. Same way, now advance. This is advance paid for medicine as at the end 1 lakh 30, and 20 is the beginning. So end is 1 lakh 30,000 and beginning was 20,000. So this way we add this up. 4 lakh 30, 4 lakh 50,000, and here it is 3 lakh 30, 3 lakh 80,000. Now let us add this together. 15 lakh 30 minus 3 lakh 80, that would be 50,000. This would be 11 lakh 50,000. So this is the medicines consumed during the year. Ended 31st March 2021. So this is the item which would be found on the debit side of your income and expenditure account as medicine consumed. So I hope it is clear. So if you're comfortable preparing this manner, you can use a statement method. If you understand the logic of what is to be included and excluded, this is a very easy method. So you would know what is to be added and what is to be subtracted. Now the same question I would be solving for you using the account method, which is also a simple method. Let us look at that particular method. First, for this account method, what we would be doing is we would prepare creditors for medicine account. In the creditors for medicine account, it is the creditors account. So we know, so by now being in 12th standard, we would know that creditors are liabilities and liabilities have which balance? Credit balance. So the opening balance would be on the credit side. So you would have by balance brought down. This would be the opening balance of creditors. You don't have to write this, but for the understanding I've written it here that we are going to put the opening balance here. So obviously the closing balance would be on the opposite side. So you would have balance carried down. This is the closing balance of creditors. Now in this question, if you remember, we had the creditors for medicine opening closing and we had advance at the opening and closing. So now creditors are liabilities and they have a credit balance. But what is advance given to the suppliers for medicine? Advance paid would be a debit balance. So the opening balance which we have would be on this side. To balance brought down, this would be advance opening balance, and we would write the closing balance on the credit side as by balance carried down. This is related to advance closing balance. Okay, so now let us put in these figures first. So what are the figures of creditors? Creditors is 2 lakh and 1 lakh 30. So opening is 2 lakh and 1 lakh 30,000. Now let us look at the advances. Advance at the beginning is 20 and end is 1 lakh 30. So So beginning is 20,000 and ending is 1,30,000. Now, what are the other details that is left here? We have stock of medicine which we will not take it into our creditors account because creditors stock of medicine are lying with the NPO, has nothing to do with the creditors. We will be using this to calculate the medicine consumed, but it would be separate formula. After we calculate the amount using the creditors account, we would be adjusting it for the opening and closing stock. Now, the only item that is left now is the amount paid for medicine during the year, which is as per the receipt and payment account. This has been paid. Who is paid here? The creditors. So, the amount paid would come into the creditors account. When creditors are paid, what is a journal entry? Creditors account debit to bank account. So, it would come on the debit side to bank account. This is related to the payment made during the year. So that is 10,80,000. So we have got this. Now we close this account. It is 11 lakh. So it comes to 12,30,000. Write it on the other side and minus 3,30,000. That would give us a difference of 9 lakh. Now, what is this amount? This amount is nothing but the purchase, a credit purchase. If it comes in creditors account, what does it mean? It is the credit purchase. So, it would be the purchase account balancing figure we have generated as 9 lakh. So, with this creditors account, our ultimate aim is to find out the balancing figure, which is the credit purchase which is made during the year. Now, this is not the end. We are supposed to find out the medicine consumed during the year so that we can get the amount which we would debit to the income and expenditure account. So, we have to find out medicines consumed during the year. So, for this, the formula is opening stock of medicine. To this, we would add the purchases which is made and we would subtract the closing stock of medicines. Now, the opening and closing stock is given in the question. As I told you, we are going to use it here in this formula. Opening stock was 3 lakh, closing was 50. So, let us put it here. Opening stock was 3 lakh. And closing stock is 50,000. And the purchases we have ascertained by preparing the creditors account, which is 9 lakh rupees. Now, if you see, this 9 lakh plus 3 lakh is 12 lakh minus 50 would be 11 lakh 50,000 rupees. So, this is the amount of medicine consumed during the year ended 31st March 2021, and this is the amount that would be debited to your income and expenditure account. Now you can see it is the same 11 lakh 50 which is being calculated using two different methods. So I hope with this very important concept, please do understand it. You can use it for finding out the medicine consumed, sports material consumed, or you can have the stationery consumed. For all this, you can use the particular method whichever is suitable for you. If you are comfortable with the calculation of medicine consumed using the statement method, you can use that. Else, if you are very comfortable with preparing accounts, you can prepare and find out the medicine consumed or the material consumed using this particular method. And sometimes there is one more point which I would like to highlight is that sometimes there is some material written off, like sports material, a portion of it is written off. Suppose out of this 20,000, let us suppose that this is not medicine but the sports material. Suppose 3,000 worth of material is written off because it is not of any value, it is totally destroyed. Then what do we do? It is out of this 20,000 written off, so we put it on the credit side. So it would come here as by material written off, whatever is the 2,000 value to be written here, and then the balancing figure would be ascertained. So account method is therefore quite a simple method too, so that you can know where to put it. And one more important point is here the purchase that we have taken is credit purchase, because as per this question they have not given any cash purchase separately. In some questions they might give you cash purchase as well. Then you have to remember that this purchase is nothing but your total purchases. So you have to include the cash purchase and this credit purchase here. So it should be cash purchase plus credit purchase, which has to be included to ascertain the goods which is consumed during the year. So I hope with this particular topic is clear to you. So let us move on. I would like to cover the next item, that is related to depreciation. Now, what is depreciation? Now, whatever you have tangible assets. For understanding this term, you can go through my video related to the basic accounting terms for 11th standard. There I have defined tangible assets are those assets which can be seen and felt, and these tangible assets value will not remain the same as it is used continuously due to wear and tear, due to passage of time. The value is going to go down, and that value which is going down, that we write off in the form of depreciation. So this depreciation is nothing but reduction in the value of assets. Reduction in value of assets, which is depreciation. You would be given the assets, you would be finding out the depreciation, that particular percentage, and you would be writing. Now here, where does this depreciation go? It would be debited to the income and expenditure account. It is a non-cash expense. So it would go to the debit side of your income and expenditure account, and you would reduce the value of the assets in the balance sheet. In the balance sheet, from the book value, would reduce the depreciation and write the net amount in the outer column, in the total of the balance sheet. So this is how depreciation is dealt with. It is the same way as it is dealt with in case of other organization. Finally, there are certain items like which you can find in an NPO, like I would like to discuss under this head, miscellaneous items, which you are likely to come across. Like you can have laws on sale of sports material. So there might be sports material when we are talking about sports club. So there could be sports material which might be sold off during the year. So we would be ascertaining whatever is the purchase made during the year. We would be netting it out against the sale, and we would be ascertaining whether this is a gain or loss. When it is a loss, it would come on the debit side. So this would be debited to income and expenditure account. Now, if the sale value was more, that I've discussed in the previous video related to the items on the income side of your income and expenditure account, the gain would be put on the credit side or the income side of the income and expenditure account. Similarly, as I told you, sports material written off also would come here. And other items, as I told you, can have audit fees which is paid to the auditor for conducting the audit, that also would come here. There could be sale of assets, and the sale might lead to loss. Then those loss, the amount of loss which remains, that is sale value minus book value, that would be the loss. That comes to the debit side of your income and expenditure account. Whereas to the extent of from the sale value, book value which is there in the balance sheet would be reduced and it would become zero, and the loss which is occurring when the sale value is lesser, than the book value, it results in a loss. If it is more, obviously it would be a gain and would come on the income side of your income and expenditure account. Now, once we have recorded all these items, I have discussed the income side item, so I am going to show you that there is Income and Expenditure Account, which is prepared for an NPO for the year ended. You would have 31st March of, say, I'll take the year 2021. You would have two sides. You would have the credit side and the debit side. This is your expenditure side, and the other side would be your income side. We have discussed the income side items in the previous video and the expenditure items written here. So you would have items like subscription, your general donations, and several other items that we have discussed. Then you have sale of old newspaper and so on. Several items would be there. And on the expenditure side, we have seen today, in our today's video, we have seen there will be several items here. You would have the materials which is consumed during the year. Then you would have the depreciation, which is charged on the assets. Then you would have the audit fees and other miscellaneous expenditures that would be debited here. Ultimately, finally, what would be done is the total of both sides would be ascertained. If the income side total is more than the expenditure, which means you would get the figure here as a balancing figure. That is called as surplus. That is excess of income over expenditure. But however, if the expenditures are more than the income, then you would get the balancing figure on this side. That is called as deficit, which is excess of expenditure over income. So you can have in a situation either surplus or a deficit. So what is done with this figure? The surplus is added to the capital fund. So added to capital fund, also called as general fund, whereas if it is a deficit, it is deducted or subtracted from the capital or the general fund. So this is how it is getting transferred to the capital fund ultimately. So I hope that's it for today. With this, we come to the end of today's session. If you found this video useful, please do like and share it. And if you have not yet subscribed, please do subscribe to this channel to get notification of all the videos. Thank you for joining me today. Have a great day.